Hello. It's been a while, hasn't it? But we're back. You are watching the FinTech Magazine show, brought to you by FinTech Magazine, InsurTech Magazine, and BizClik Media Group. My name is Scott Birch, and every 2 weeks we bring you all the latest news, analysis, and opinions from the wide world of FinTech, right here on LinkedIn, YouTube, and on our other digital platforms as well. Joining me today, as ever, is FinTech and InsurTech editor Joanna England. Jo, how are you doing today?
I'm good, thank you, Scott. It's a sunny day, it's Friday, and God, it's been a long time since we've been here, hasn't it?
You know what? It has been a long time because, well, we've been out and about, haven't we? Which is quite nice after being locked up for so long. From a pandemic point of view, I hasten to add. We've been out and about. So I was at Money 2020, which we'll talk about later on in the show as well. Spoke to some amazing people there as well. And Jo, you've been out and about as well. And of course, last week, some of our viewers might actually have been there. We had our Tech Live London event down at Tobacco Dock. I was hosting one of the stages there for technology and AI, and Joanna, she had to put another one of her hats on, metaphorical hats, and instead of doing fintech, she turned her hand to cyber, didn't you, Jo?
I did. It was quite an experience.
It certainly was, and it was roasting hot. We had train strikes to contend with, thunderstorms, but like troopers, we just plowed on through. And yeah, some really great speakers, and we had some really good speakers from this universe as well. So people from the worlds of fintech. On my stage, for instance, I had a speaker from JP Morgan, and I know that we had multiple speakers from financial institutions and insurance representation across our 4 live stages. Can you believe we had 4 live stages? What were we thinking? Anyway, look, that was that show. This is this show. So let's get on with it. And yeah, in fact, Jo, why don't you tell us, we've got a poll, haven't we, that we do each show, which goes out on LinkedIn. And some of you have probably already voted in this. But if not, Jo, remind us what the topic is and what the choices we're giving people here today.
Okay, so the topic today for the poll is how has the global economic climate most impacted the fintech space, in your opinion? So it was A, less investment, B, shrinking teams, C, valuations hit, or D, IPO delays.
Right, okay, so, and as Jo said as well, you still have a chance to go and vote in here as well. So go along to LinkedIn. Most of you are probably already in LinkedIn watching the show right now. So if you are watching this live, you can go and have your say in the poll. And we'll be bringing you the results of that towards the end of the show today. But before then, let's start by taking a look at some of the latest news in fintech and insurtech. Okay, Jo, over to you. Why don't you share some of the latest news for us?
Okay, so today I thought we'd focus on the current economic climate for fintechs, because we're running our poll in that, and that seemed to tie in nicely. And of course, the situation facing companies this week might seem a little bit bleak, because of course Australia's first all digital bank, Volt, which was the first neo in Australia to be granted a full banking license, has unfortunately announced its collapse. Now, the reasons for that, I mean, they're probably manifold, but the primary reason that has been highlighted is the fact that investment was too low, and Volt didn't raise the funding it needed to carry it through. So as a result, has had to shut down. Now, it's not alone in finding the current climate very challenging, and there have been reports of other companies struggling too, many of them very established brands. So, for example, there were reports a little while ago that Klarna had lost 30% of its valuation, although we have heard from Klarna, and they said that this at this point it is pure speculation, and they're currently maintaining their 41.6 billion valuation. So that's a space to watch. And Policy Genius is another company that's feeling the pinch. It recently cut its workforce by 25%. And then, of course, this week we also had the news that Amount, which is an online lender, has cut its workforce by 18%. So there are freezes on hiring, something that might actually ease the war on talent a bit at the moment. Coinbase, for example, has paused hiring at the world's biggest crypto exchange, and it also went a step further and even rescinded job offers that had already been made but not yet commenced. So big moves being made there. And I think these examples of workforce losses, they seem to be an indication of fintechs and insurtechs looking at the current situation and preparing for the worst by making themselves more resilient. So they're cutting costs, they're putting a lot on hold, they are probably scaling back on large-scale spending and probably concentrating on managing their current customers well. So if you look at it in that respect, it's not all bad news. It seems to be more like sort of damage limitation. And also we've had some great news as well. So, for example, the buy now, pay later fintech Zilch has just secured an additional 50 million in funding to top up its latest Series C funding round from last year. And it's also holding steady with its valuation. And Clio as well, a London-based financial wellbeing app, has just raised 80 million, which it's going to use to fuel further US growth. So there's no freeze in hiring there either. So it's a mixed bag, really. Some companies are preparing for the worst, some have fallen by the wayside, and others are doing great. And I think that's really just kind of something to hold on to. We seem to be getting a lot of bad news through, but maybe bad news is not actually bad news. It's just companies being sensible. Does that make sense?
Okay, and it does make sense. Now, can you actually hear me? As you might tell, I had a bit of a technical mishap, so I'm actually joining you from my mobile, but can you hear me?
Yeah, we can hear you good. Yeah, it's good.
Okay, good. All right, I'm just going to try and prop up my phone so I can talk to you properly. There we go. Oh, hang on, maybe I should go landscape. Oh no, that's a bad idea. Okay.
I'm feeling a bit seasick now.
Yeah, sorry about that. I'll just stay where I am. Okay, so Joe, I did lose you, as I just said there. Was that the first story or second story that you were talking us through there?
That's the first story. We're really just talking about sort of how fintech companies are coping and responding to the current economic climate. And it seems like it's a lot of bad news, but actually there are probably a lot of positives to be taken away from that. The result of a squeeze is generally that companies, they contract and they make themselves a little bit more resilient. So as opposed to the sort of skyrocketing spending and splurging, they're now sort of being a bit more circumspect. And that's not a bad thing.
Yeah, so, like I say, that's something that's happening across the tech industries, not just fintech, where companies are, maybe trimming back their workforces, tightening their proverbial belts, mainly because I think they're trying to reach profitability sooner than they'd originally planned, obviously in tough times. Okay, look, why don't you move on to the next story then, Joe, which is insurtech related?
Sure, yes. Now, the next story is about a report that's come out that's detailing how the funding environment for insurtechs, as well as having been hit by the economic climate at the moment, fintechs are also underfunded regardless compared to other industries. So in our case, we'd be comparing that to fintechs. And it's very clear that fintechs in general command a lot more investment than insurtechs. I mean, we don't see the same huge mega rounds in insurtech that we do with fintechs. I mean, obviously there are a couple of companies that pull in the big bucks, but not to the same extent. But having said that, things are looking up despite the difficulties. So Instander, for example, just raised 45 million. And is doing very well. And WeFox, a company that never seems to come down from on high, has just announced its 2 million customer milestone. And it's also announced that it's on track to double in size again by the end of the year. Now, WeFox has doubled every year since it launched in 2015, and of course, it's the insurtech that's commanded the largest ever funding round for insurtech globally, and it got that last year, and it raised £600 million. So no other companies come close to knocking it off the top spot so far. So yeah, I mean, there are, like I say, as with the fintech story earlier. Things are looking okay. They're not terrible. So, you know, I think you have to kind of look at the industry as a whole and make a judgment based on that.
Yeah, well, that's good. Like you say, there are some stories that on the face of it may seem slightly negative and a downward turn. But I think that there are always positives to be found there as well, if only we look hard enough. Look, I'm still having problems with my tech, as you can no doubt tell. So this is probably an appropriate time for us to maybe cut to the break slightly earlier than usual. So Ernie, if you don't mind, if you've got the ad break queued up, why don't we do that? And we'll see you all after the break.
Customers and employees are producing millions of signals critical to your business. How they feel, what they like, why this product and not that, where they're spending money, what could be better, or what would make them happier, spend more, and be more loyal. These signals are flooding into your organization in live time. Medallia captures all these signals and makes sense of them, so you can understand every experience along every journey. Our artificial intelligence analyzes all these signals to detect patterns, identify risk, and predict behavior, so you can fix problems before they happen and double down on opportunities to make experiences extraordinary. Because with Medallia, customers build the best products, employees build the best companies, and together, we build the best brands.
Okay. Still on my phone. Update. The Wi-Fi went off completely, apparently. So everywhere the Wi-Fi has gone down. So I am struggling here. So hopefully I will stay in touch, and I'm going to try and get back online as soon as possible. Unfortunately, because we are a digital first company, that also means I'm unable to access my running order for the rest of the show, Joe. So Joe, if you can take over and just talk us through the rest of the show, then that'd be awesome, and I'll try and keep up as best I can.
Okay, so we wanted to open after the break with an interview that I did not that long ago, a couple of weeks ago, and I chose this particular topic because I'm always really amazed at the sheer innovations that emerge from the insurtech space. One of which is Earth observation technology. And it uses AI and satellite data to compile predictive analytics on crisis events. And I spoke to Thomas Loriden, who is the CEO of Riask, which has recently received backing from Tencent to extend its work in climate change risk assessment. So that's really good. That's just coming up now. Can we get that up now?
Riask is, well, we describe Riask as a science and technology company. We've been going for 4 years. Initially, we founded the company in Australia, been sort of bootstrapping for 4 years, as you say, in the startup world. But more recently, we got funding from a few major investors, including Tencent. And we are expanding now in Europe, including an office in the UK. What we do is essentially build algorithms that help quantify the risk from natural catastrophes. And we do that at a global scale. So this is something that is very important to us, is that for anywhere in the world, we are able to quantify risk scores, risk metrics in terms of any climate hazards.
What are the
differentiators in Riask's technologies? What makes it stand out from the crowd in comparison to other entities?
So I'd say there's probably two ways to answer that question. From a sort of more conceptual point of view, I think the difference is we have models that are very much driven by physics rather than statistics. So I guess until now, most models in our industry, which is the catastrophe risk modeling industry, tend to use historical data, past views of risk, along with sort of statistical modeling to sort of provide the view of what could happen, what hasn't necessarily happened, but what could very much happen. And that is fine. That is a very good way of looking at risk. However, it has a couple of limitations. The first one is that it relies on having good historical data, good records of that, which tends to be the case along the US, or maybe Japan and Australia, but has difficulties in other parts of the world, such as Madagascar, Mozambique, the North Indian, or the South Pacific Islands. The other, perhaps more important problem is that this is very good once you're looking at a system that doesn't change. So essentially, you're assuming that you're in the same conditions as what has happened in the past, and that is a good representation of what is likely to happen next. Obviously, a big problem with the way our climate is changing these days. And so our solution to that is to really, instead of relying purely on statistics and past records, we are building models that are more driven by physics. So we want those models to be able to replicate history in places where it matters, but for the right reasons, being the physical reasons. And by doing so, we're then able to naturally expand our views to regions of the world with poor historical records. But also, more importantly, we're able to expand our views into future views of risk, how we think the risk might shift. So that's sort of the conceptual bit. In terms of the technicalities of it, the way we're able to do that is by using a lot more of AI and machine learning methodologies in the way we build the models.
So which different parts of the insurance industry do your innovations help? For example, brokers, insurers, reinsurers, and ILS firms?
Yeah, I mean, I'd like, and I will say all of them, because essentially what we are providing as a solution is something that can help organizations that want to have a global view. So any organization that is interested in risk on the global scale, or organizations that are very interested in quantifying how their risk changes over time. So by saying this, I do hope that I captured the whole of the insurance industry. But we can take more specific examples for sure. Like we do work with global insurers, reinsurers, who would have a particular interest in knowing how their risk on the global scale can be measured and measured in a consistent way. So whether that is for risk accumulation or sort of risk selection or just monitoring their portfolio, our solution has a very big advantage that it is globally consistent. So the same way of pricing risk is applied throughout the globe. At the moment, it is tropical cyclone risks, but eventually it will be for all of the climate risks. And the second part I touched on is that we do work through all the different timescales. So we can work immediately at the moment of an event occurring. So when a hurricane makes landfall in the US, we will be providing an estimate of the wind risk on the ground within hours of the landfall. And so we can work with insurers that are worried about claim management on that front or the players of the chain. We also work slightly later on in that time frame. We work in terms of parametric solutions. So we provide within days of the landfall a view of, again, the wind risk that occurred. This is a product that is global and that is used by companies like Swiss Re or Descartes Underwriting in deciding whether their parametric policy should trigger or not. We also just keep on moving in the sort of timeline. We work on the scale of seasonal forecasting, just trying to anticipate how we think the risk might shift in a given season, given hurricane season, for instance. And that's something we've been doing with a couple of ILS fund managers. And then finally, the product we're bringing to the market this year is very much focused on climate change. So trying to really quantify explicitly the shift to expect in the coming decades according to different climate scenarios or different time windows. So to come back to your question, yes, I do hope that we can cover any part of the insurance chain.
Well, all I can say is it's a good job we had some pre-recorded content to show that go. That was awesome. I'm so glad that you did that. Here's one we prepared earlier, a nice little interview there. Now that was really interesting, and I've tried to reboot my machine. Let's see what happens. And but in the meantime, I do sort of remember the rest of the stuff we're going to be talking about today. Now, one of the things that I wanted to talk about, and this might not be in the order that the video guys are expecting this, is the live events. We have our next, excuse me, we have our next FinTech Live event coming up in November. And that takes place on the 1st and 2nd of November at a new venue for us, actually, and probably a venue that a lot of people might not be familiar with. It's called Magazine London. That's the name of the actual venue, which hence the mild confusion. But yeah, we're moving there. It's a really cool venue. It's based in Greenwich. It's opposite sort of the city, Canary Wharf. Great views over the Thames as well. So if you want to come and join us for the next FinTech Live, 1st and 2nd of November, then tickets are available now. And I do believe, if memory serves, there are some early bird tickets that are available right now as well. I know that we've got some amazing speakers lined up for that show already. I think our friends, oh no, I better not say. I'm not going to say who might be on stage, but I know of some people who are flying in, shall we say, to speak at the event. Can't wait to see them all. And it should be a great show. And talking of great shows, we were also at Money 2020, as I said, a couple of weeks ago in Amsterdam. And while we were there, we got the opportunity to do some interviews with a lot of executives, either on their stands or backstage in the media area over at Money 2020. So I just wanted to share one of those videos with you right now. Now, what we did was we created these specifically for social media. So the format is a square format rather than a portrait or landscape. So if it looks a little bit strange, that's why we did it. But to see all of the videos that we created, if you head over to our LinkedIn profiles, which obviously you are hopefully already there, then if you scroll down, you should be able to see all of the posts and the interviews that we've done. So, Ernie, if you're ready, could you please cue the VT from Money 2020?
Hi, I'm Matt Mills and I'm the Chief Commercial Officer of Featurespace. So Featurespace has the best performing machine learning and AI models in the world when it comes to solving the very complex problems of fraud and financial crime. We're lucky to work with some of the best people in this industry, solving really complex problems for them, which means that they have less fraud and their customers are inconvenienced much less often. So dramatic reduction in what are called false positives and a massive increase in fraud detection. So we're here at Money 2020 to meet some of our brilliant customers, our amazing partners, and also to bump into some of our prospects as well, and also just to raise awareness of Featurespace and the great value that we can add to so many fintech businesses. Absolutely. So Featurespace is very lucky that we work with some of the biggest processors, some of the biggest banks and some of the biggest fintechs, as well as very established big banking players as well. And what we do is a few things. So if you're, let's say, a bank or a neobank and you want to launch into new territories, or indeed you just want to launch and you want to have the best-in-class fraud detection with the lowest false positives, then you would generally come to Featurespace in order to be able to have that. The other thing is when we work with some of the processors that are out there, either on the banking issuing side or on the merchant acquirer side, we can work with them to effectively build great products together. And so one of the things we're really excited about here at Money 2020 is we're launching V4, which is the next generation of the underlying Featurespace ARIC platform. We already have best-in-class reporting, as has been described by the analysts that cover our space. But what we're doing is we're supercharging that and taking it to another level. So we want to be well ahead of the market in terms of the quality of our reporting. We're also improving the way in which our customers can deploy Featurespace on the cloud, so that it's much easier, it's much faster, and it's much more scalable. And generally a bunch of enhancements based on our customers' feedback. So as ever, all of these innovations are around giving the best possible customer experience for our wonderful mix of customers and partners.
So there you go. And just a quick shout out to Drew from our video team, who did a really great job at Money 2020, filming people on the stands, especially. So yeah, great to get that content while we were there. All in all, we did about 12, I think, executive interviews. Some really interesting insights as well. So make sure you head to our social channels and you can catch all of them there. As you can tell, I'm still on my phone and not my laptop. Laptop update. Now it is obviously the 1st of July today. I hope you all did your pinch punch first of the month. I know I certainly did. And you may well be wondering, well, if it's the 1st of July, then where is the new issue of FinTech? Well, that is in progress. And obviously Monday being the 4th of July and being quite a significant public holiday for our friends over in the US, we are actually going to be publishing FinTech, I believe, on Tuesday, so we don't clash with the holiday. So we have an issue of FinTech out next week and an issue of InsurTech. So it's a double header. And Joe, why don't you tease us with some of the great content that you've got coming out in those issues?
Oh, we've got so much good content coming out in these ones. So if I just do a quick run through of what you can expect from InsurTech, we've got a great interview with Andy Yeoman, who is the CEO of Consiris. We've got in-depth interviews with NTT Data, AXA, Pekin Insurance, Generale, and Mapfre. So those are all really great, chunky stories. And then for FinTech, we've got an interview with Tom Pope, who is the head of payments for Tink. We've also got a feature on small business banking. Another really good feature on managing mergers and acquisitions, which is obviously really big news at the moment. Everybody's into their M&A and the digital ecosystem, and sort of connecting all over the place. And then we've also got some deep dives with RedZ, East West Bank, and Home Credit, plus loads more. So that is going to be something great to watch out for on July 5th.
Absolutely. Well, I wasn't expecting quite a sneak preview. That is some preview you've given us there, Joe. It just shows how much amazing content there is in these magazines. Now, Yes, yeah, exactly. Now, before I throw you under the bus here, Joe, do you have the results of the poll?
Do I have the results of the poll? I do. Let me just.
Excellent.
Okay.
Then why don't we have those results then? Before we do, why don't you just remind us, or Ernie, can you just put across the bottom of the screen the poll question? There we go. So how has the global economic climate most impacted the FinTech space, in your opinion? So Joe, why don't you run us through the results and tell us your opinion on that?
Okay, so the biggest option was less investment at 40%. Most people think that is going to be the biggest hit. Whereas next was shrinking teams. Next was valuations being hit. That was 27%. Then shrinking teams at 21%, and then 11% thought IPOs would be delayed. So yeah, I mean, I would definitely agree with the result of that poll, judging on kind of what I've seen with the investment climate at the moment. It is down. People are less likely to put their hands in their pockets to put specifically for new startups. I think what's interesting about the investment space at the moment, especially in the financial industry, is that incumbents seem to be cleaning up a bit more with the investment, basically because they've been around a lot longer, they're established, and there's a sense of trust there. Whereas a lot of fintechs that are newer entities, and so they're kind of maybe missing out a little bit. But I don't think that's a long-term issue. I think it'll be something that rights itself in the next few months. So
yeah, I think you're right. Yeah, you know, tough times, but I think you're right. I think the fintechs have a certain degree of resilience right now, and I'm sure they'll ride out this wave and come back even stronger as well. Okay, I think that's all we've got time for, Joe. Was there anything else that we've missed on the running order that I haven't mentioned?
No, we've actually gone through everything today. You've done very well, considering you had no script at all. Well done.
Thank you very much. I'll take that. My laptop is still rebooting, which is a bit of a concern. But anyway, I just want to say thank you, everybody, for your patience and for joining us. This is a live show. This is what happens in live shows, right? Internet goes down, things happen. So thank you for persevering with us. Hope you enjoyed some of the great content we had as well. Actually, some videos that you probably haven't seen before, and that little sneak preview of the magazines that are coming out next week. Remember, so please make sure you visit our websites. Hopefully, we've got a little ticker across the bottom there of our websites. Visit our websites where you can find all the latest news and information and analysis, and you can also read our magazines. There you go. You can read our digital publications by visiting there as well, and you can find out more details about the FinTech Live event that I mentioned on 1st and 2nd of November in London, where you can join us in person or join us remote. It's a hybrid event, so grab your tickets now for that as well. And we'll see you in 2 weeks' time, where obviously we can show you the new issues of fintech and insurtech. I want to say a huge thank you to Joe for carrying the show today while I was hampered somewhat by the technology, for Ernie, who's always a star pressing the buttons in the video team, and for Andrew, I think, who was our marketing guru for today. So this has been a BizClik Media Group production, and we'll see you all again in 2 weeks. Thanks for watching. Bye, everyone.